All right, guys, we've got Proctor Gamble. It's currently sitting at 146.54 on Google Finance, ticker symbol PG. It's Sunday night, so this would have been Friday afternoon. It would have been up 4.09%, and then the after hours, it's up a little bit more at up 0.02%. Over the past 5 days, it's up 4.23%. Over the past month, it is up 0.33%. Over the past 6 months, it's up 5.93%. Year to date, it's up 2.25%. On a 1-year chart, it's down 9.85%. On a 5-year chart, it's up 8.66%. And on a maximum chart, this goes back to June 6th, 1986. It's up 2,940.25%. That's Procter & Gamble. One of the reasons I wanted to check them out today, the rest of the market is getting creamed badly. And Procter & Gamble's up, a little over 4%. So we'll take a look at them. They pay a dividend of 2.97%, a quarterly dividend of $1.09. They got a PE ratio of 21.43, 52-week high of $167.25, a 52-week low of $137.62, with an EPS of $6.84. They've got about 2.33 billion shares outstanding, with a $341.23 billion market cap. They got about 109,000 employees. Procter & Gamble. All right. So we'll keep it moving, go right into their earnings. So they reported on April 24th, 2026. They beat on EPS. They were predicted to get $1.56. They beat by 2.24%, getting $1.59. They also beat on revenue. They were predicted to get $20.52 billion. They got $21.24 billion. That's a 3.5% beat. Very nice. Let's scroll down and see when the last time that they missed was. If lately, if it's been a while, who knows? Let's see. Oh, look at this. So they missed on revenue right here in Q2 of 2026. They missed by 0.37%. Then they missed again in Q3 of 2025 by 1.87%. And then look at this. Look at this. They missed 4 times in a row right here, spanning from Q2 of 2024 to Q1 of 2025, missing revenue each time. Not by much, 1.09%, 0.98%, 1.18%, and 0.25%, but still. What's going on? Why are we missing? So they got a pretty sick dividend, but they've been missing on stuff. What's up with that? So here we go. Let's read their at a glance. P&G exceeds earnings and revenue estimates. The Procter & Gamble Company reported fiscal Q3 2026 adjusted EPS of $1.63 and revenue of $21.24 billion, surpassing the estimated EPS of $1.55, I guess, and revenue of $20.52 billion. Guidance maintained amid rising cost headwinds. Procter & Gamble maintained its fiscal year 2026 organic sales growth guidance of in line to 4%, though it warned that EPS may land at the lower end of its target range due to $150 million in commodity and logistics headwinds. Dividend streaks extends to 70 years. Reinforcing its status as a dividend king, the company announced its 70th consecutive annual dividend increase and expects to return a total of $15 billion to shareholders in fiscal 2026. Positive volume growth drives organic sales. Organic sales grew by 3% during the quarter, significantly bolstered by a 2% increase in unit volume, marking the first time in a year that the company reported volume growth across its broad portfolio. Beauty and personal care lead performance. The beauty segment was a standout performer with 5% volume growth, while the personal skin care and hair care categories also saw healthy demand increases. Tariffs and restructuring impact projections. The company estimated a $400 million after-tax impact from tariffs in fiscal 2026 and continues its restructuring plan, which involves a 15% reduction in non-manufacturing headcount over 2 years. So here's their analyst outlook. I rather like this little thing they've added to this. This is very cool. So, based on 18 analysts giving stock ratings to Procter & Gamble in the past 3 months, we've got 11 buys, 7 holds, and 0 sells. Based on 18 Wall Street analysts offering 12-month price targets for Procter & Gamble in the last 3 months, we've got the highest target being $181. That's a 23.52% increase from here. The average target being $160.30. That's a plus 9.39% from here. And then they got the lowest one, that's a 142. That would be a drawdown of 3.1% from where we're at. That's interesting. So, I'm thinking let's read an article. Here we go. So we'll just read some of these headlines real quick. We're going to read this whole article here, but check out some of the other ones. While Procter & Gamble stock is quietly surging, Procter & Gamble stock outpaced market drop. What's next for shares? The dividend stock that keeps raising its payout no matter what the market does. Interesting stuff. So we're going to read this one though, by the Motley Fool. Procter & Gamble versus Clorox. Which consumer goods stock is a better buy in 2026? Net margins, debt levels, and portfolio strategies set these two household giants apart. See how their fundamentals and valuations compare before you invest. This is by Robert Izquierdo at The Motley Fool, written on May 28th, 2026, at about 12:17 p.m. All right. Are you seeking stability or value in the household goods market? Comparing Procter & Gamble and Clorox reveals two distinct paths for conservative investors today. Procter & Gamble is a global behemoth with a massive portfolio of diverse household brands, while Clorox focuses on specialized cleaning and wellness products with a smaller footprint. Both are defensive stalwarts, yet their scale and balance sheet health vary significantly. The case for Procter & Gamble. Procter & Gamble operates through 10 distinct categories, including grooming, healthcare, and beauty. Its products reach consumers in over 180 countries, making it one of the largest consumer staples companies by market cap. While its global reach is wide, the company depends heavily on Walmart for approximately 16% of its sales. Customer concentration like this adds a layer of risk to the business, as any change in shelf space or pricing terms could impact results. In its 2025 fiscal year, ended June 30th, revenue reached $84.3 billion, representing a slight growth of 0.3% compared to the prior year. Net income for the period was $15.7 billion, yielding a net margin of 19%. This margin, which measures the percentage of revenue remaining after all expenses are paid, indicates how much profit is generated from each dollar of sales. As of the June 2025 balance sheet, the debt-to-equity ratio was 0.7x. This metric compares total debt to shareholder equity, indicating how much of the company is funded by lenders versus owners. The current ratio, which measures the ability to pay short-term debts with liquid assets, was 0.7x. Free cash flow for the year was $14 billion, representing cash from operations minus money spent on capital expenditures. The case for Clorox. The Clorox company maintains a portfolio focused on cleaning, wellness, and household convenience. Its brands such as Pine Sol, Glad, and Burt's Bees are staples in many homes and professional settings. Like its larger peer, the company faces significant customer concentration, with Walmart accounting for nearly 27% of fiscal 2025 sales, With such heavy reliance on a single retailer can make the business vulnerable to changes in purchasing patterns or retail floor space allocations. During its 2025 fiscal year, which also ended June 30th, revenue was $7.1 billion, reflecting a modest growth of about 0.2% over the previous year. Net income for the fiscal period reached $810.0 million, compared to just $280 million in the prior year. This performance led to a net margin of 11.4%, which measures how efficiently the firm turns revenue into profit after taxes and costs. Based on its June 2025 financial report, the debt-to-equity ratio was 9x. This indicates a high level of debt relative to shareholder equity, which is a common point of analysis for capital-intensive companies. The current ratio stood at 0.8x, a metric that helps investors assess short-term liquidity and the ability to cover immediate bills. Free cash flow for the year was $761 million, calculated as operating cash flow minus expenditure on physical assets. Risk profile comparison. Procter Gamble faces intense competition from global rivals such as Unilever. These competitors often battle for shelf space and consumer loyalty through aggressive marketing and pricing. The company also deals with geopolitical instability and trade controls, which can distribute global manufacturing networks. Furthermore, cyber attacks or IT failures pose a constant threat to its complex international operations. Clorox deals with heavy competition from both name brands and lower-priced private label products. Larger competitors such as Colgate-Palmolive may have more financial resources to capture market share. The company is also exposed to supply chain volatility, particularly regarding the cost of raw materials like resin and energy. Geopolitical conflicts and inflation also threaten to squeeze profitability if higher costs cannot be passed to consumers. Valuation comparison. Clorox currently trades at a lower price-to-sales ratio relative to both its larger rival and its expected forward PE. There's a little metric here. So Procter & Gamble is at 20.8x forward PE, while Clorox is at 17.4x. The sector benchmark here is 25.5x. The price to sales ratio is 4x, while Clorox is at 1.6x. Which stock should I buy in 2026? This is according to the Motley Fool, this guy. This is not your cousin Dustin speaking. This is an article. Which stock should I buy in 2026? Choosing to invest in Procter & Gamble or Clorox is a good move to add defensive stocks to a portfolio. However, neither is a high-growth company, so investors would be buying primarily for their dividend income. From that perspective, Procter & Gamble offers a robust dividend yield of 2.9% as of May 28th. Clorox provides a far higher yield of 5.1%, which makes it appear to be the better buy. But there's an important consideration here. The ability to pay dividends is determined based on available free cash flow. Procter & Gamble generates robust free cash flow. In its latest fiscal quarter ended March 31st, the company produced adjusted free cash flow of $3 billion, an increase over the prior year's $2.8 billion. Rising free cash flow is a good sign that Procter & Gamble can not only maintain its dividend but afford to raise it as well. Clorox generates much lower free cash flow, but it grew free cash flow to $761 million in fiscal year 2025 compared to $483 million in 2024. The company is also undertaking initiatives to reduce its expenditures and streamline operations, which point to the potential for further investments in FCF. But given Procter & Gamble's far greater FCF amount, it would be my choice to invest in over Clorox, even though the latter has the higher dividend yield. They're pretty comparable. 3,281.59% Coca-Cola, 2,940.25% for Procter & Gamble. 5-year chart, Coca-Cola's outperformed. They're the orange one here. Coca-Cola is up by 41.52% over the past 5 years, while Procter & Gamble is only up 8.66%. Past year, Coca-Cola has outperformed, up 10.74%, while Procter & Gamble is down 9.85%. Year to date, Coca-Cola has outperformed. 6 months, Coca-Cola has outperformed. So there you have that. On a 5-day chart, Procter & Gamble's outperformed by, they were up 4.23%, where Coca-Cola is only up 0.79%. So, take from that what you will. Let's have a look at their CEO real quick. There he is. Shailesh J. Jujurikar. Pretty cool. Alright. Well, I guess we'll go ahead and read all this. Shailesh Jujurikar is Procter & Gamble's president and chief executive officer and serves on the company's board of directors. In this role, Shailesh is responsible for leading one of the world's largest consumer packaged good companies, serving about 5 billion people in more than 180 countries every year. Prior to becoming CEO in January 2026, he just became CEO in 2026. Look at that. He was Chief Operating Officer with profit and loss responsibility for P&G's enterprise markets, Latin America, India, Middle East, Africa, Southeast Asia, and Eastern Europe, and led information technology, global business services, sales, market operations, purchasing, manufacturing, distribution, and new business for the company. Wow. Shailesh's extensive Procter & Gamble career has spanned multiple businesses: health and beauty care, home care, fabric care, and P&G Professional, in both developed and developing regions, North America, Europe, Asia, and Africa. With a passion for impacting the lives of people around the world, he is known for his ability to identify growth possibilities by meeting the needs of consumers in new, better, and more complete ways. He has consistently delivered strong business results in every market and on every business, enabled via his deep experience of growing brands locally, regionally, globally, and across industries. Alright, that's enough. We're not going to sit here and glaze this guy forever, He just became CEO. Let's see how he does. Very interesting. Let's ask Gemini one question. Tell me about Procter & Gamble's dividend and answer in one paragraph. Alright, Procter & Gamble is one of the market's most reliable income-generating stocks, holding the prestigious status of both a dividend aristocrat and a dividend king. The consumer staples giant has paid a dividend to shareholders for 134 consecutive years and has actively increased its payout for 68 consecutive years. Currently, Procter & Gamble pays an annualized dividend of about $4.35 a share, translating to a dividend yield of 2.97%. The company recently increased its quarterly payout to $1.08.85, so 108.885 per share in April 2026, which is supported by a substantial earnings payout ratio of roughly 61%, ensuring that its massive global portfolio of household products and household brands continues to provide reliable, recession-resistant cash flow to investors. So their dividend is pretty safe, I guess. So, what do you know? So guys, what do we think about Procter & Gamble, They haven't moved much in the last several years, but, they got a fat dividend, or a pretty good dividend, I guess you could say. Let me know in the comments, what do you think about Procter & Gamble? My big thing is it was up, over 4% today, when the rest of the market was taking a real beating. I mean, we got a lot of stuff you know, quite a bit down. But, you know, so it goes. It's your cousin Dustin, guys. Let me know what you think. Thanks.